Hey guys, Marc Sinnott here with a quick market update. Hope everyone is staying safe and healthy. So I've been getting a lot of questions the last couple of weeks about the market. Should I sell? Should I buy? Should I wait? That's what a lot of people are doing. They're waiting on the sidelines and waiting to see how this plays out. So I wanted to just share a few quick tidbits and stats with you guys about the market and what we should expect with everything that's going on in the world right now. So first one is this: an economic recession does not necessarily equal a housing crisis. Home prices have actually appreciated during 3 out of the last 5 recessions that we've had. So out of the last 5 times we've had an economic recession here in the US, which was 1980, 81, 91, 2001, and the most recent one in 2008. The housing market has actually appreciated or gone up during 3 out of those last 5 recessions. And, we all have in our recent memory the recession of 08, 09, where the global market crashed, the housing market crashed, the loan market just completely collapsed, and the stock market collapsed as well. But this isn't necessarily the case every time. We can have an economic recession while real estate prices actually stay stable or continue to increase. And so it's not necessary that housing market will crash along with the stock market. And the second one is this: the housing sector is actually entering this recession underbuilt rather than overbuilt. And because of this, as the economy rebounds, which it will, housing is actually going to be really well positioned to lead the way out. So what does this mean? We actually haven't been building enough housing over the last several years to keep up with the demand. And because of this, we still have a fundamental lack of supply. And of course, we are going to see demand be affected by the unemployment, but we still do have a really severe shortage of supply, which is going to keep prices elevated to a certain level. And I also believe that we're going to see new types of demand entering the market. For example, a lot of people are getting shaken out of the stock market right now because of all the recent volatility we've had the last few months. And so they're going to be looking for safer places to put their money when they pull it out of the stock market. And that could be, treasury bills, it could be gold and silver, or it could be rental real estate. Investment property is actually seen as one of the safer asset classes because it has cash flow and it has wealth preservation and appreciation. So I actually think we're going to see an increase in demand for income property. And I also think that, demand for rentals is going to stay strong as well. So all things considered, I think that number one, an economic slowdown does not necessarily equal a housing crisis. I don't think we're heading into a housing crisis. And I personally do not believe that we're going to be looking at a repeat of the 2008 collapse that we saw. So of course, if you have any questions, feel free to reach out to me directly. And I've got a couple of cool infographics that go along with this information. I'm going to share them down in the post below here. So once again, I'm Marc Sinnott, and stay safe out there.